Hello, I'm Smits for the Capital Network, and joining me here in Sydney at ANZ Banking Group is the bank's Chief Economist, Warren Hogan. Warren, wonderful to have you here today.
My pleasure.
Now, ANZ has long been focused on generating growth from Asia, but the markets have been very worried about China this year. Why do you believe that is, and do you believe this concern is justified?
It is justified, and that's because China is trying to undertake a transition that most other major economies, when they've done it, have failed, or at least have gone through a major economic downturn in the process. And that transition is from their industrial-led model of growth, their export-oriented model of growth, towards a more consumer-oriented, service-oriented economy. I believe they will make the transition. It's critical for the world, not only critical for China, but as I said, no country's made the transition without some sort of major economic downturn.
Okay, the transition does sound pretty scary, and especially if we look closer to home in Australia, the mining scene, lower demand from China really is going to hit commodity prices. Which commodity prices do you see being the worst hit, and which may fare better?
Look, I think the most of the damage is being done in the commodity markets from a price point of view, and it's pretty broad-based, whether you're talking base metals, whether you're talking bulks, and that oil now is under extreme pressure at the start of the year. So, I think that we're not looking for significant further falls.
So we may have bottomed out here?
We're getting close to it, I believe.
Okay.
The real issue, though, is that China's big surge in demand for particularly metal, which affects bulks, is seemingly coming to an end. And the next wave of demand, which is from countries like India and Indonesia, is slow in coming through, and it may be half a decade away. So,
any bright spots on that commodity horizon, some that may be more resilient than others?
Look, there's going to be bits and pieces, and that's all going to be determined by supply and demand balances, and particularly the amount of supply coming in. We're reasonably optimistic on copper from here. Gold, I think, is going to continue to perform okay. And then, of course, soft commodities, I think, are going to be a bright spot over the next few years.
Okay, and if we can look more globally, what are the main risks that you're going to be paying attention to this year?
The main risk is that the China slowdown turns into a China recession, that the RMB declines substantially, that financial instability in China spooks markets, and that we have some sort of a slump in global confidence. And this is sort of the way the year started.
Certainly be hoping that picks up by the end of the year. But if we can fast forward to the end, final question, Warren, where do you see the RBA putting interest rates by the end of this year?
We see interest rates in Australia coming closer to the global interest rate, which of course is near zero. Ours is at 2.
So moving significantly lower from where we are at the beginning of the year.
Just another 50 basis points we believe will finish lower. So Australian interest rates sort of finishing between 1 and 2 rather than the 2% level where we started the year.
Okay, well, we'll be waiting and seeing, and hopefully not all of those risks eventuate. But thank you so much for your time today.
My pleasure.